Hello, Ashraf Lighty, and welcome to this new edition of the premium video analysis in this Tuesday, May the 12th, 2020. So there is a lot of congestion, hesitancy, consolidation in the markets. There's still consolidation in the market. If for the Dows, it's 24,300, 24,100. For the S&P, it is just around that 50-70 point pip range. And FX continues to do the same thing. Euro dollar still continues to hold this support here and here and here and here, and now it's time to push back up. And 109.50, 109.60 is the time to be cautious. This is basically the WhatsApp group, which was finally formed last week, and basically, so here we give a heads up. When we issue a trade, we tell them, an hour before or half hour before that I decided to write the trade that I'm going to go long or I'm going to go short. And then there was an additional chart that I didn't put for the premium. So after I posted the premium chart, I said, oh, there's an extra chart I want to put. So I put that one. And this is the kind of stuff that I do here. So basically, and again, it's for those who are subscribers of 3 months or 6 months or 12 months. If it's 3 months, you have to have been a subscriber with us for at least 6 months or a year. Otherwise, it's for the 6 month subscribers and 12-month subscribers. I'm basically giving this extra service to those who basically, trust us with our analysis, and those who show faith and dedication, we offer them this extra service. And it can make a big difference when we basically say what we're going to do, and it's an extension of all this analysis. And basically, so let's just look at so this is the dollar index chart. It's really doesn't need anything else. It just shows these highs here, and these highs are here where it's a triple high, or it's a triple top, and then you got this not bearish engulfing candle, but it's it is closing on the previous candle. So we may look like we're going to have to push lower here in the dollar index, which would only likely take us back towards the 55 DMA in euro dollar. And I'm going to speak on the euro dollar in a bit here, but I just want to just to give a preview. Indices are in a range, but look what's happening here also. This is the index. This is the Ferrari of the part of the indices of the sectors. Have been doing very well. But look what's interesting. Look what the NASDAQ is showing here. So it pushed to 93.22, but it's still failing to close this gap. So you have to watch this gap here, this down gap. It has to fill it, and this was basically filled around it came about February the 24th. So not only you need to close, you need to fill it, but you need to break it, but you need to fill it. Like the DAX failed to do that, but the NASDAQ, this is what it's doing. And the RSI here, it speaks for itself. Trendline resistance is still failing. Okay, so this is quite interesting to look at the composite. At the NASDAQ 100. And if you look at the semiconductors, again, which is a big member or big factor in the technology, you also look at this very familiar highs here, or potentially double top here, and just like we had here just before the crash. Yeah, it was a crash. So this is interesting to see, and we're still seeing lower highs in the indices. And the same story here, if you look at the DAX, where we had the gap here. Okay, we have this gap, and the DAX went above this gap, and it basically broke into it, but it never filled it. So this is quite interesting to look at. And then we are going to, so we'll keep the Dow here on the side. Yes, it was up to 100, then it's up 57. One thing from the fundamentals they need to pay attention that's really going to probably weigh on these indices. It's not to do with the whether there's more cases or the less cases, or there are some places in the heartland of the United States they're seeing more cases, or the people are worried that the reopening is going to be faster and messy. No, it is that the Secretary of the Treasury, Mnuchin, he basically said we are not in a hurry to issue additional stimulus. Around, a lot of people are saying that the Fed is ready to put in more, but the Fed wants wants Congress to agree on more stimulus. And now suddenly they're all worried about the debt. Suddenly, when there is a national emergency, and to basically people are having a hard time getting masks and getting tests, they're worried about the deficit and about the debt. They didn't worry about that when they were cutting taxes for the rich and so on and so forth. Listen, I'm not trying to sound populist or populistic or communist or socialist. It's just basically the double standard is rife here, and that's what's interesting. And it's all known, yes, they did over 2 trillion, but as long as there is going to be a resistance for further stimulus, the market is not going to like it. And I've showed you the technicals of the NASDAQs and the potential signs of a dissipated momentum before we come down. So that's what we're seeing. So, but let's go to the euro dollar, and the thing that I mentioned in last video, which is the weekly RSI. If you go to the weekly RSI, I said what's the weekly RSI doing in the euro dollar is this. We broke this nice quote unquote perfectly looking triangle. This is the weekly RSI 14 euro dollar. And so we broke above it, we came back down, we tested support, and we pushed back higher. And what I wanted to show was this, okay? So basically this. So the last time we did that, so we did this now. And this was after the bottom end of the markets in March 2009, when basically the dollar peaked, gold kind of bottomed, and earlier in late 2008. But that's when the dollar started to fall, and the stock market started to push higher, and liquidity was became plentiful from the Fed, and basically the risk on trade rallied, raged with a vengeance from March 09 up until October or December 09, before Greece and the Greece problems raised their ugly head. And we saw this nice, perfectly symmetrical triangle, and we broke above it. And then we saw it in 2005, and I mentioned this, and I'll mention it again, I'll mention it again and again and again. 2005 was an important year. It was an up year for the dollar, but it was an up year, it was an interregnum. So it was an interruption of the dollar bear market that started in 2002, a down dollar 2002, down dollar 2003, down dollar 2004, and then 2005 the dollar started to push higher, and then that came to the end when the ECB started to raise rates in end of December 2005 into 2008, and the Federal Reserve was raising rates, and it stopped raising them in summer 06. June 06 was the last one, and that's when we saw euro dollar take off. All right, just for some information, there's some, yeah, so, and there was a big drop in gold in summer 06, because basically the Fed surprised the market, and they did one more rate hike in June 2006. I remember that clear as day. And the other example of a symmetrical triangle here was this one in the RSI. Not as pretty, but this was alongside the lows of the euro. So this is what we're seeing, and it is as far as the weekly RSI and the 20-year life of the euro. This is what basically these are the examples that still hold here. Okay, so this is what we have here. I'll go into the the Kiwi trade, but before I go to the Kiwi trade that I issued yesterday, let's just go to this, which is probably one of my favorite trades here, and it's still, it's taken a while to materialize. but it's really looking nice and pretty and all the adjectives that you want. This is a daily chart. This is euro sterling. Usually when this pushes higher, the market drops. Okay, so if this pushes higher, this may be readying us to tell us that yeah, the stock market is really peaking. And as when we looked at the NASDAQ, the signs of dissipation and waning momentum could be a sign. But this is quite important here. Why people are asking the fundamentals? Why does the euro sterling, when it pushes higher, this is alongside with the falling stock market? Because the euro dollar does better than the sterling dollar, or euro does better than sterling when stocks are tired. But so the market wants to go at least towards 88.40, and this is the daily, and RSI was still barely below 60. And if you look at the weekly, you'll see the situation is improving. It needs further improvement, but this is what we need. Okay, and so we are at 53, a great example of higher lows. I mean, you can get higher lows, clear higher lows than this. But if you link the trendline resistance of the highs, you'll see there's more upside there. All enough for you to break out of this. Look at how the moving average are telling you that this, in the English language, that this consolidation is important and we need to break out of it. And that's what we're likely to break out. And if you don't pay attention to the RSI, you just look at the price action, this may look like it's gonna go higher. Okay, so the NZD trade that we had yesterday, this would be a nice short when stocks do start to fall, but this is what the weekly chart looks like, and here is the daily. Okay. So it does look like it's, in a way, it is higher lows, higher highs, but yesterday the chart looked like it was a bearish engulfing candle, daily candle here. We had that. The market is pushing higher a little bit, and so basically I think we may have to push back towards 61.30, 61.40 before we back that down. And I just said that one of the other choices was to also go euro long euro kiwi and short kiwi dollar. And this was the trade, this was the chart, this is the information, and you're going to click on it once and it's going to come out. Do it again. Okay, that's basically that. And it's big trend line resistance as far as the daily, going all the way from December. Okay, here and here and here. So this is what we are at here, and let's look just at gold. Yes, the market is still in a range. There's no need to get so excited. There's one interesting information. This is gold is still doing okay. You know, each time it goes to 1690, some people panic, but it seems that it is in a range, and it seems that it probably is going to want to have to retest the ceiling of the RSI trend line here. I may take us towards one more time towards 723, but we still need to break above this. And this is still, in a way, like a symmetrical triangle or a flag. CPI today came in, so real yield are negative, and that is not bad for gold, because it is the competition of gold. So that's very, very interesting to see. And that's basically that. Yes, we closed out of the dollar yen trade, saying that we may have to push back to issue a new trade. So we're sitting on the dollar yen trade, shorting a 108.60, and we shorted it at 108.60, and when we were at 105.80, we did not close it. We were thinking that we're going to go further, but then we went to 107.60. We closed at 107.60, and it seems that it's failing the 55 DMA. So this is very interesting, and this is really highly correlated with the dollar index. And I showed you the dollar index chart showing the dollar is going to fall at least 2%, and this is what's also weighing with it, and it's pushing lower. So, and these are the trades. Euro sterling is still a good confidence. Euro dollar, good confidence. Even euro kiwi, and NZ dollar, just be cautious and stay cautious. And yeah, gold is still long, and these are really the core of our trade. Bitcoin, we have the halving today. They're going to reduce the reward by half. That means they're going to reduce production. It could be potentially higher for the for Bitcoin. I do strongly think it's one of the most technically traded markets, and I think that's why Bitcoin, we were long at 62,000 and we went to 10,000 a few days ago, and I think we're still going to push higher. And that's basically the situation. Don't forget about the WhatsApp group if you have a 6 or 12 month subscription. Thank you very much and all the best.